Assalamualaikum warahmatullahi wabarakatuh, and good day everyone. Our group will be presenting on Malaysia as the global pioneer and powerhouse in the sukuk market. This presentation will cover the regulatory and governmental drivers, financial innovation in sukuk, and strategies for Malaysia to sustain its leadership in the future. Sukuk are Islamic financial instruments that represent ownerships in underlying assets or projects. Rather than that, they must comply with Sharia principles such as the prohibition of interest and excessive uncertainty. Over the past few decades, Malaysia has successfully positioned itself as the world's leading sukuk market. Malaysia's sukuk journey began in 1990 with the first corporate sukuk issuance. This was followed by landmark global sovereign sukuk in the early 2000s, which attracted international investors. Since 2010, Malaysia has continued to innovate through green and sustainable sukuk, reinforcing in leadership position. This slide highlight the distinct but complementary roles of Malaysia's key regulatory bodies. Bank Negara Malaysia, which is BNM, as the central bank, oversees Islamic banking and monetary stability. It regulates sovereign sukuk such as MGII and provides Sharia-compliant liquidity instruments for Islamic banks, ensuring market stability and confidence. In contrast, the Securities Commission Malaysia, which is SC, focuses on the capital market. It regulates corporate sukuk, issuance guidelines for various sukuk structures, and actively promotes innovations such as SRI and green sukuk. Together, BNM ensures stability, while the SC drive market growth and innovation.
Next, this table shows the comparison between Bank Negara Malaysia and the Securities Commission Malaysia. Bank Negara Malaysia or BNM focuses on the banking and monetary system. Its main role is to maintain financial stability, and it regulates banks, insurance and takaful companies to protect depositors and policyholders. On the other hand, the Securities Commission or SC focuses on the capital market. It ensures the market is fair and orderly, regulates the stock market and listed companies, and protects investors. In short, BNM looks after banks and money, while SC looks after stocks and capital market. The Malaysian government has acted as the primary catalyst in developing the sukuk market. By issuing sovereign sukuk, the government established a risk-free benchmark yield curve, which is crucial for pricing corporate sukuk accurately. This active participation significantly boosted investor confidence both domestically and internationally. More importantly, it demonstrated strong political commitment to Islamic finance, signaling long-term policy support. The government also pioneered innovative issuances such as Global Wakalah and Green Sukuk, which expanded the market and positioned Malaysia as a global leader in sukuk innovation.
On this slide, explain the evolution of sukuk structure in Malaysia, which can be divided into three key stages: simple, complex and hybrid. Each stage reflects the maturity and growth of the Malaysian Islamic capital market. In the early stage, sukuk structure were simple and straightforward. They were easy to understand and mainly relied on a single Sharia contract, making them suitable for a developing market. The most common example during this stage was sukuk ijarah, which is based on leasing assets. This structure provided clarity, lower risk, and strong Sharia compliance, making it attractive to both issuers and investors. As the market expanded, Malaysia moved into a more complex phase. During this stage, sukuk structure began to incorporate profit sharing and partnership-based contracts such as musyarakah. These structures were designed to support specific projects or tailored financing needs, especially for infrastructure and large-scale investment. This development allowed greater flexibility and better alignment between investor and issuer. The later stage is the hybrid sukuk structure, which represents the most advanced form of sukuk development. Hybrid sukuk combine two or more Sharia contracts within a single structure. This approach was created to meet and complex financing requirements while still maintaining Sharia principles. Overall, the evolution of sukuk in Malaysia highlights the country's leadership in Islamic finance and its ability to innovate in response to changing market needs.
What makes it different from normal sukuk is not the contract, but the purpose and certification. So, green sukuk actually combines Islamic principle environmental protection and capital market innovation. Now, I will explain the typical structure of green sukuk. Green sukuk does not mean a completely new Sharia contract. Instead, it normally uses wakalah, ijarah or muharabah structure, but with additional green certification and reporting requirement. Step number 1, a special purpose vehicle or SPV issue the sukuk. This SPV is created only for the sukuk transaction so that the project and the risks are clearly separated. Step number 2, investor purchase sukuk certificate and provide the funds needed. Step number 3, the most important part, which the money risk is used only for certified green project. This condition is monitored and cannot simply be changed to non-green project. Step number 4, when the project starts operating, it will generate cash flow. For example, a solar plant will sell electricity and earn income. From this income, the investor will receive their predict return. Finally, at maturity period, the sukuk is redeemed, meaning investor will receive back their sukuk is Sharia compliant. Green sukuk is fully Sharia compliant because first, it avoids riba since profit is based on project revenue. Second, asset and project are real and identifiable, which are not speculative. 3. Contract use are clearly defined, which avoid gharar. 4. All structure are reviewed and approved by the Sharia Advisory Council. At the same time, it also supports Maqasid al-Sharia, which emphasize preservation of the environment and public welfare. For a conventional investor, green sukuk is attractive because first, worldwide, which means many investors now prioritize ESG and sustainability. Second, it provides portfolio diversification beyond normal bonds. Third, returns are competitive with conventional bonds. Fourth, it opens the door for international participation in Malaysian sukuk market. Next, for the Islamic investor, green sukuk is even more meaningful. Why? Why is it meaningful? Because the first one, it aligns with Maqasid al-Sharia, especially environmental protection. Second, promote ethical, socially responsible investment. Third, expand the range of Sharia compliant instrument available. The fourth, strengthen Malaysian position as a global Islamic finance.
So next, I will explain how Malaysia can maintain its leadership in the global sukuk market in the future. Although Malaysia is currently the largest sukuk market in the world, future success cannot depend on size alone. Malaysia must focus on strong regulation, innovation and global trends. There are 4 key strategies to achieve this. First is improving global Sharia and regulatory harmonization. Different Sharia interpretation across country creates uncertainty for investors. Malaysia has a strong Sharia governance system and can take the lead in working with international bodies such as AAO, IFI and IFSB. By promoting standard sukuk structures, Malaysia can reduce legal risk and increase investor confidence. Second is strength ESG and sustainable sukuk. Global investors now care more about the environment and social impact. Sukuk naturally fix ESG values because it is ethical and asset-based. Malaysia should expand sukuk into social sukuk, sustainability link and transition sukuk. Clear impact reporting will attract more international investors. Third is using financial technology and digitalization. Technology can make the sukuk market more efficient. Blockchain can improve transparency and Sharia compliance, while sukuk can make the investment more affordable. Digital trading platforms can also improve liquidity in the secondary market. Lastly, the fourth is developing new sukuk markets. Malaysia should offer more types of sukuk such as infrastructure sukuk, retail sukuk and SME sukuk. This will support economic growth, increase financial inclusion and reduce reliance on global market conditions. In conclusion, by focusing on harmonizations, sustainability, digital innovation and market diversification, Malaysia can remain a trusted and leading global sukuk center.